Extensive flooding in Australia over recent weeks has hit the state of Queensland particularly hard. That's the home of Australia's coal sector and therefore will have major international impacts, particularly in the Asia-Pacific region. The flooding in Queensland has affected large swaths of Australia, and it's definitely going to have an impact on domestic life and even on government finance as the government attempts to reconstruct all of the infrastructure that's been damaged. If you look at Australia's coal sector, you'll see where the international impact will emanate from. Stratfor is most interested, of course, in how the flooding impacts other countries. Australia provides about 54% of global coking coal exports, but about 10 to 20% of its production is expected to get hit from the floods, and stockpiles are already low in Australia, and that's going to get worse. Prices have risen by about 10% on spot markets, so there's going to be an impact, and if you look at the countries that are most reliant on Australian coal, you'll see where that will take place. First of all, you have Japan, Taiwan, and South Korea. These are all countries that import about 100% of their coal and get a large portion of it from Australia. But also India, for instance, gets about 37% of its coal from Australia. And China also is one to take a look at. China isn't as dependent on imports. China's production at home amounts to most of its consumption, but there is a little bit of coal that it's had to import in the past 5 years or so. China's done that basically to alleviate some of the distribution problems it has at home and to meet the really booming demand as the economy grows rapidly. With the prospect of coal shortages or supply tightness from Australia, there could be real problems from the Australian flooding. Needless to say, to patch the gap left by Australian exports getting curtailed, these states will be looking for other exporters. Some of the major coal producers are Canada, the United States, Russia, Indonesia. These are states that can possibly provide more. In the case of Russia, however, domestic consumption is close enough to its production levels that there isn't a lot of leeway. So Canada and the US will be the best examples. Indonesia has indicated that it might limit its exports this year. Globally, with all the stimulus policies that have been enacted to keep economies growing, there's a lot of liquidity out there that has been going into commodities on the basis that currencies like the US dollar are weakening. That investment is driving commodity prices up aside from these supply disruptions. So if you add in a round of supply disruptions, we could have some really sharp price spikes, and that will indeed affect the countries that are major commodity importers.